Hey guys, welcome to another episode of Everything Business. All right, so today I'll be talking about correction of errors, right? More specifically, errors that do not affect the trial balance or errors not affecting the trial balance. All right, so let's get right into it. So then we need to revise what the purpose of the trial balance actually is, right? So the purpose of the trial balance is to check the arithmetic accuracy of the ledgers. In other words, the trial balance is supposed to check for errors in the ledgers. So where there are errors in the ledgers, the trial balance is supposed to pick it up, right? And one way you know that the trial balance has picked up an error is when the trial balance is not balanced, right? Which means that the debit side of the trial balance is not equal to the credit side of the trial balance. And if you have not yet watched my video on trial balance, then you need to check it out, right? Check out my video on trial balance, right? It should be displayed right there. All right. So then, does the trial balance pick up all errors? No, right? When I'm teaching my students about trial balance, I did tell them, or I do tell them that the trial balance pick up errors, but I tell them that it doesn't pick up all the errors. Because there are some errors that the trial balance will not pick up. And those are the errors that we are going to be talking about today. All right. So we have about 6 errors here that if they exist, they will not affect the trial balance. What that means is that the trial balance will still balance. You will still feel that everything is all right and you will be happy, right? But the errors will be there, right? And so you need to know the errors first and foremost, and then you need to know how to correct the error if you are presented with a situation like this. All right. So we have the error of commission, we have error of principle, error of original entry, error of omission, compensating errors, complete reversal of entries. So these are the 6 errors that do not affect the trial balance. So let's look at the first one, error of commission. Now, this is when the correct amount is entered, but in the wrong person's account. Error of commission can be easily identified when it comes down to people's names, right? People's or businesses' names, right? You enter the correct amount, but it entered into the wrong person account. So for example, on May 3, you sold goods and credit to M. Barrett for $5,000, but you entered it in error in M. Barnett's account. Of course, you can see why the error would be made, right? Because Barnett and Barrett, they are kind of close. The names are kind of close, right? So what you actually did was you actually debited Barnett's account. If you look at it here, right? And I put Barnett here in red to show that this is not the account that the information should be in, right? So you actually would have debited Barnett's account because you are selling him goods, he's receiving, right? You would have actually debited his account, right? But that would have been an error. Now what you need to do is you need to take out this $5,000 out of Barnett's account, right? And in accounting principle, how we do that by doing the opposite of what we did. So if we had debited Barnett's account, now we have to credit his account with the $5,000. That is accounting principle on how to get the information out, right? So you credit it with M. Barrett, $5,000, and then you debit M. Barrett's account. And it's, if you realize, it is where it should have been in the first place. So now M. Barrett's account is debited with $5,000. That is where the information should have been placed in the first place. So what you really need to do to know in order to do well at this topic, you need to understand double entry principles, right? You need to understand double entry principle. Very important. So basically what we did here was we debited M. Barrett's account and we credited M. Barnett's account, right? You would need to show this now in a journal because we use a journal to do the correction of errors. So you would need to show this information in a journal, all right? If you stay to the end of the video, you will see the journal and how I record them in the journal, all right? So stay tuned to the end of the video. Next error is error of principle. Now, this is when the correct amount is entered into the wrong type of account. And I want you to pay attention to the word type of account, right? So for example, on May 6th, you paid for motor expenses for $350, right? But you entered it in error in the motor van account. You can understand why you would make a mistake. Motor expenses, motor van, they kind of sound similar. Principles governing them are similar, right? Because they are both assets account, right? And well, sorry, they're not both assets account. The motor van is an asset, motor expenses is an expense account, but the principles governing them is the same, right? You debit when these accounts are increasing. And so you would understand why you would put the information in the motor van account. However, it's an error. So this is in red here would be the error. And how do you correct it? You would do the opposite, right? So you would credit motor van and you would debit now motor expenses, right? And so the information is where it should be in the first place. So in your journal now, you would have debit motor van, motor expenses, sorry, and credit motor van account. Next error is the error of original entry, right? And this is when an incorrect amount is entered in both accounts. For example, May 8th, sales on credit of $150 to Team Manley have been entered in both accounts as $160. So with the error of original entry, the incorrect amount or the original amount that is entered is incorrect in both accounts. All right. In this case, the amount that is entered is overstated. You actually sold goods on credit to Team Manley for $150. However, you made an error and you overstated the amount by $10, right? And so Team Manley's account would have been overstated by what? By $10. Likewise, the sales account would have been overstated by $10, right? The amount that is entered is incorrect, which is 160. It should have been 150. So we need to reduce Team Manley's account by $10. Accounting principle, how do we do that? We just credit. If the account is debited, we credit the account, right? $10 to reduce it by $10. For the sales account, and this is one of the only times you're going to debit the sales account, right? You will debit the sales account $10 to reduce the amount that is on the credit side by $10. Similarly, if the accounts were understated, so say for example, you had recorded $130 or $140 instead of $150, right? Then both accounts would need to be increased by $10, right? So what you would need to do then for the Team Manley account, you would need to put $10 here. So you would have May 8th error $10, right? And for sales, you would credit it to increase it. May 8th error $10. All right, that is what you would have done if you want to increase both accounts. All right, so that's the error of original entry. All right, so now we reach to my favorite error. I don't know if I should say that, but it's my favorite error because it's the easiest error to correct. So the error of omission. So this is when the transaction have been completely omitted from the books, right? So you didn't put them in, and this is where your double entry principle will come in very handy, right? And so to correct this type of error, all you need to do is just to put the error in, right? So for example, on May 10, you bought some good on credit from P. Smalling for $2,000. They have never been entered into the books. So now you just have to enter this transaction into the books. So you would debit the purchases account and you would credit P. Smalling's account. And that's how you correct it. Very easy, right? Then we move on to the next error, compensating errors. And this is when two errors cancel each other out. So for example, the purchases account is overstated by $10 and the sales account is also overstated by, $100, and the sales account is also overstated by $100. You can then understand why the trial balance would still be balanced, right? Because the purchases account carry a debit balance, the sales account carry a credit balance. It therefore means that the debit column of the trial balance would be overstated by $100, as will the credit side of the trial balance as well. So, the trial balance would still be balanced. Now, how do we correct this? So for the purchases account, if it is overstated by $100, right? If it is overstated by $100, then you need to reduce it by $100, which is you would have to credit it. Similarly, for the sales account, if it is overstated by $100, you would need to correct it by debiting the sales account $100. All right. And the last and probably most difficult error to correct is the complete reversal of entries. Now pay keen attention. Now this is where the correct amount is entered in the correct account, right? But on the incorrect side. So for example, cash paid to L. Sims for $54 entered on the debit side of the cash book and the credit side of L. Sims account, right? Now let's look at our double entry principle. if you are paying cash to LSIMS, it means that the cash account is paying, LSIMS is receiving. It means that also that LSIMS account should be debited and the cash account should be credited. But this is what we did. We debited the cash account, see it in red, and we credited LSIMS account. What this is basically saying is that LSIMS paid us some money in cash, which is not what it's supposed to be saying. It is supposed to be saying we pay LSIMS. So the cash account should be credited. Now, when you're correcting this error, you cannot just credit the cash account like that, right? With $54. Because if you credit the cash account with $54, you are basically canceling out this $54 here. And you would leave the balance on the cash account would be zero. You don't want that. You need to show that there is a payment of $54. So what you need to do is you need to double the amount that is on the debit side, right? So when you double it, you will cancel this one and also show a payment of $54. So you double it, right? So you credit the cash account, $108, which is 54 times 2, and you debit LSIMS account with $108, right? So that's how you correct that type of entry, right? Now, look at the journal. This is the journal entry. As I said before, we use the journal to do correction of errors, right? And so this is how the journal would look. You can see how I put in the information here, right? What is debited? The account that is debited should come first. The account that is credited, right, comes second, and you move it away from the margin, right? And then we have here error of commission, right? It is a narrative. They call it a narrative. Sometimes in questions, they will ask you for the narrative. The narrative is just simply telling what the transaction is about, right? If they don't ask you, you don't have to put it, right? And so I did this for all of the corrections that I did before. This is basically the summary of what I did, right? And as you see, my journal would be balanced, right? And that's how you correct errors. All right, so join me in my next video. I'll be talking about errors that does affect the trial balance, right? And we're going to be talking about suspense accounts just the same. All right, thank you for tuning in. Wow, good.